If you inherited an IRA after the end of 2019, going into 2020 and moving forward, a lot has changed. You're probably already aware of that. There's been some massive confusion. I've done a video on it, but now I want to bring some clarity to this. And then I also want to share something that you are going to have to be very cautious of, because things are really changing on the custodial side for the inherited IRA. And so I'm going to go ahead and just jump in. If we haven't met, I'm Eric with Jazz Wealth Managers. We don't just invest your dough here. We like to educate you on your dough. All right, so let's take a look at what the IRS first says with these inherited IRAs. And I'm going to break it down. This is primarily for what's called the designated beneficiary who is not an eligible designated beneficiary. So this is really confusing on how all of this works, but this is directly from the IRS site. And so the designated beneficiary who is not an eligible beneficiary. The difference there is if you are eligible, you may be a spouse, you may have somebody, you may be a child, and so a minor. There's different things there that apply to the eligible person. So there's one thing there, but then once it goes from there, the designated beneficiary who is not eligible, distributions to a designated beneficiary who is not an eligible designated beneficiary must be completed within 10 years of the death of the owner. This is where all of the confusion comes into play. Because in 2020 and 2021, basically everybody said, hey, guess what? You have 10 years to empty out an inherited IRA account. Well, then the IRS said, no, that's not what we meant. Instead, we meant something totally different. Now, what they meant, how you do the withdrawals, that is where the confusion really comes into play. And I'm going to show you exactly what I'm talking about here. Because in the designated beneficiary section, it says that see the 10-year rule. Well, all that I can find, and maybe you're really good at finding this on the internet. If so, let us know. Let us know if you found it different. But right here, it says the definition for the 10-year rule breaks it down is empty the entire account by the end of the 10th year following the year of the account owner's death. And then other than that, doesn't say anything else about the 10-year rule. Nothing that I can personally find. Like I say, I hope you can find something for me. The IRS will not treat a beneficiary of inherited account in a plan or IRA who was subject to the 10-year rule and who failed to take an RMD for 21 and 22. So what that means is if you didn't take an RMD in 2021 or 2022, that's okay. It looks as though they're not going to penalize you for that. But if you inherited an account and you're subject to that 10-year rule, then you're going to have to start taking an RMD. Now, this gets a little confusing as well because there's some different descriptions here. And so with an inherited account, used to, if you took an RMD, it was based, oftentimes it could have been based, there's a stretch period where it could have been based on your life expectancy. Or the other side of that, it could be based on the person who has passed away, the deceased's life expectancy. And you would have to take the RMD based on that. Well, if we're looking here, this one's from Vanguard. Vanguard says that non-spouse and all of these different things. If you have multiple beneficiaries, that's one thing. And then, so it says that for all multiple beneficiaries have not established separate accounts, all beneficiaries must take RMDs on the basis of the oldest beneficiary's life expectancy. Or here, it's saying that an individual non-spouse beneficiary must begin taking RMDs on the basis of his or her own life expectancy. Vanguard, just bear with me because I'm trying to show you the confusion here because you might also be stuck trying to figure this one out. It's super confusing. So then we've got Schwab. Schwab's telling us now, this is all new. These are very current that I just pulled up everything here. Designated beneficiaries, if you don't meet, you must fully distribute all the assets by the end of the 10th year. We already know that. The IRS said it. If the account owner had reached their required beginning date to start taking RMDs before they died, you will also be required to continue taking RMDs during the 10-year period. Now, what's confusing with Schwab is they don't say, is it the stretch RMD? Is it the one that's based on our life expectancy? Or is it based on something else? So then we have Fidelity. Fidelity, good for you for breaking this down a little bit better for us. Hopefully this is the right one because everybody seems to be confused and it's confused me. and it's probably confused you. That's why you're watching this. And so with the designated beneficiary, non-eligible designated beneficiary, Fidelity has a super cool chart here. And it basically breaks it down. Transferring an inherited IRA, take required minimum distributions based on the longer of the descendant's life expectancy or the beneficiary's life expectancy. So if they passed away post-required beginning date, so after they've already taken the RMD, it seems as though if they hadn't taken the RMD, you just have 10 years. You have the 10 years to figure it out and withdraw from the account, all of it. But if not, if they'd already started the RMD, it kind of goes both ways there with the beneficiary's life expectancy or the actual person's. With that said, I would suggest just going ahead and taking it from the beneficiary's life expectancy, or not the beneficiary's. I'm going to mess you up here, getting confused. It's going to be from the deceased's life expectancy on the RMD. This isn't tax advice. I'm telling you because I'm confused on this. If I'm confused, you're confused. Vanguard, Schwab, Fidelity, all of them are saying a bit different on this. If you just go ahead and lean on the side of caution here, because the IRS is still very confusing with this whole deal. And so that's really how I would suggest doing it. Take the RMD if they've already started. Now, here's the big bomb drop on this. Gosh, can't even talk. Custodians are not going to help you calculate your inherited RMD anymore. And so if you had an inherited IRA in the past, how it would work is they would basically break it down and show what you would need to be taking at the end of the year. Well, multiple different custodians have now said, hey, we're not doing that. And obviously because it's confusing. There's the 5-year rule, there's the 10-year rule, there's the taking it based on your life expectancy, or there's the one that it's taking it on the deceased life expectancy. There's too many variables that come into play. So if you are doing this for yourself, I would suggest calculating this, going to one of these websites. If you have an inherited IRA that you've inherited after 2020 and the person you inherited it from has already started taking RMDs when they passed away, then I would suggest putting their info in and putting all of the information in as it's still them. So that's how I would personally suggest doing it. Again, this isn't tax advice legally. Some of these things will tell you to consult a tax professional. Go for it. Contact them. See if they can figure this thing out, because I think if Fidelity, Schwab, and Vanguard are not all on the same page and the IRS is still really confusing, we just have to err on the side of caution and do the best we can with what we've got. So it's a lot to give you right there, but this is one that I want to make sure that somebody, if you're out there looking for this info, that we're here and trying to help provide as much clarity as we can on this. All right, well, thanks for watching. If you haven't, check us out, jazzwealth.com. Thanks for watching. If you want to watch more FinTips videos, click here. Be sure to like and subscribe also.